Good morning. Hoping everybody's having a great St. Patrick's Day. We're going to be looking at ticker symbol DRYS, also known as DRYS Shipping Incorporated, currently trading at $4.18. And we see here the stock was originally initiated at around a couple years back in 2014, 2012, and we see here that it initially traded at $1,862 and began to downtrend into a continuous downtrend through reverse share splits through Mr. George Economou, who started the company around 2005, but he began to dump a lot of these shares around the anytime the rise would happen, and then eventually it bottomed out, and there was a small run that happened in the market last year that gave everybody a stir when for one day the stock jumped from $2, like a dollar or a penny, to $100 overnight, basically. And this is what pretty much gets the folklore, if you will, of this stock. And so looking at the stock, we can see in different time frames really what's going on, and understanding that through our MTTS trading system, and really see if we got buy or sell indicators on the stock. But before we go to that, I just wanted to update you a little bit about the company. It was founded in 2004, and as I mentioned before, it's by Mr. George Economou, who was the first dry ship company to go public in the United States, and very interesting enough. And it's currently on the NASDAQ exchange, and it's a really big diversified shipping portfolio, and it's focusing on, a lot of growth and trying to find that. But let's go back to the website. It shows you the fleet. They have, on staff, they have these different vehicles, the water vessels to help ship their vessels. And according to them, they have over 35 vessels, which operating nationwide, internationally, is really a great opportunity to really hone in on the shipping and index. And let's just look at the Baltic Sea Index, shipping index, so you can see how that's operating. And let's see that. We can catch that all the time. It's called the BDIY, and that's how it's traded. Let's see if we can go here to the 1 year. It's it's how to go to the 5 year, actually. That's a better time frame to look at for this. We see here the peaking, it started to bottom out at around 2016. We saw a low of 317, and now we see the index picking up into this next year, and it kind of peaked a little bit around the December time frame, and now we're kind of curling back down. But you see this 1,000 level is very clean level. We need to see that as support, and we see here like 1,000 is very often a test for the market high. And so we need to see this break through to 1,500 to see a stock like DRYS really get a real run in the market. And now let's go back to the time frame. I just want to update you with some more news that as of March 14th, 2018, the company has repurchased a total amount of 1,724,942 shares of its common stocks for an aggregate amount of $6.7 million, including commissions, and also announces a stock repurchase program under which the company may repurchase up to $50 million of its outstanding common stock. So it seems like it's reversing the trend of beforehand, where it was dumping the stocks, and the company was diluting the shares and issuing out more and more shares, so more outstanding shares versus more institutionally owned shares, which means there's a larger float, and that provides an opportunity for the stock to continue to go lower, because the value is going to go down when there's more of it and there's less demand for the stock. And beforehand, there's also an announcement that it was also beginning to do a dividend, which is also a great opportunity for the stock. I believe it was in February. And it was the most announcement that I thought was the most interesting was that the CEO, George Economou, just announced that he's having a 70.6% stake in DryShips in an Amendment 13D form that he had filed. So that's really interesting that he has owned so much of the shares in the company, and this is reported, by Benzing Bazinga, I think. And so that's really an important update to really keep in mind, because any stock that's highly institutionally owned at 70% is factored to run up on the fact that there's not that many shares available on this factor. We can be able to trade off of that information, because when there's more demand for these shares and there's less of them, then there's going to be more demand for the stock to go up. And it just posted earnings on the 27th, and it actually, let's see how it did. It got EPS -2, and the sales was 42.959 from $12.84 million year over year. So it's up in sales, and earnings are recovering, and even though it's posting negative earnings, still it's getting closer to posting positive earnings. And this announcement for the future, they have other things like the announcement for a future planned spin-off of its gas carrier business, and that's a big opportunity to keep in mind, and I think that's a possible thing that's really going to happen. And since a month ago they were trying to repurchase $50 million in shares, so they're really going through the motions now, and I feel like they're trying to really keep in touch and announce things. Let's get rid of these trend lines, and now let's look at the stock. So since we can't use a year time frame, is just not going to be practical at this point, because we're going to be looking more for this for a short-term swing, or just to look as if you want to hold this for long term and you believe in that the Baltic Shipping Index and the C Index is going to be on a rise, and you see that there's going to be more demand for international global shipping via carriers on the cargo carriers on these using these ships that DRYShips provides, these vessels and ocean rigs. You can see that this is going to be a good stock, and you can take a look at that. But let's look at a smaller time frame. Let's start with the 3-month daily. So we see on the 3-month daily, it's hit a low. It's hit from a low 2.74 to about 4.48. And we got a sell indicator right here. This is a MTTS sell indicator, and we saw this sell indicator come at 438. So we would have taken the sell out right here if we had gone long in this position. And just to reiterate that, let's show you how we can look at this with a drawing tool and see the Fibonacci retracement really provides us a good way to retrace the low to the high. And we see here now trading to let's start with this high, which is the current high, 447, about the same. Let's just edit it. If you want to edit it, you just go right click, and then you can go to the edit tab, and then just change it up. And now we got this. We got the high, 4.47. Oh, sorry, 4.48. Let's change that. Okay, so now we got that, and now we got the low at 2.74. Let's go back and change that. 2.74. Okay. Now we got this. So what would it take for this stock to go back to retrace to the low? That would be a 23% retracement to 4.07, and we had seen that actually at the market open. It opened at 4.07. So right now it's been trading kind of like this candlestick, opening at the highs, but then settling down at the lows, but still opening up higher than the previous low. And this inverted hammer could be a bullish signal overall, but right here we see a sell indicator at the top because the stock was topping out and really couldn't break down past this resistance line at about 4.48, which you could say is 4.5. So the stock really needs to break through this trade barrier at 4.5 in order to really pop up. And we saw kurtosis pop right around this point when the stock continued to really rise, and now we're seeing a decline in the kurtosis. Meaning, which is the imbalance of what the market cannot price in on a standard bell curve. Like an example would be if the teacher thinks everybody's going to get a B and somehow the kids all get an A. That's an example of when the market is not able to price that in. And so in this case, the teacher, when she's grading, she could not be able to notice that. And so it creates an imbalance in the trade flow. And that's what really provides you a clear direction of where the stock's going to go. And seeing here, we see this pop and then drop right here, right around the sell. So maybe if we see another kurtosis bump going through above here, above 0, then we can see another rise up above 4.5. And now let's look at this on a shorter term time frame. The 5-day, 15 minutes is a good signal of where we're going to look at. Okay, so you see here, you see how it's been trading around this trend around the 4.07, but we can say 4.05. 4.0 if you even want to be that. If so, if you want to scalp this stock, maybe you want to enter around 4.0, because looking at this trend line, we see there's we got 4 buy indicators, 1, 2, 3 at this level, and about 0 sell indicators except for about 4.2, 4.5, 4.5 area. There's a couple. So if it dips below 4.5, it dips below that. You might even want to just do a lottery. You see how there's 2 support lines right here, one at 3.92 right here at this level, and then right here as well at this level. So you could say 3.95 is a good way to catch a bounce on this if it somehow dips below that level. But currently we see here that there's actually a buy indicator on the 5-day 15 minutes. So it looks like possibly the stock can retest the possible high that happened on the other day, on Thursday. And today we saw a retest of this high at around 4.38, but this could not sustain, and we saw here that the candles on the candlestick, we saw along almost a doji candle type, and we saw a long doji, and then it seemed to just drop off in the volume and didn't pick up the rest of the day. And we're looking for a bigger kurtosis spike. We didn't see what we saw one right here right before the stock blew up, from about the $4 area to 4.48 in about one day, almost 0.5 points. And if you're risking about, let's say you set your stop at 3, if you say you entered at 4.0 and you want to have a 2-to-1 ratio, you're going to have your stop loss at 3.75 and you could have, since it's a little, you want to be safer, we would have set it at based off the prior high at 4.4. And so actually you would want to have your stop at 3.8, and then you could have your you could have your target at 4.4. That means you're only risking 20 cents, the 3.8 at the entry at $4, and then your reward would be in that case 0.5, because so 0.4. So that's a good 2-to-1 ratio, 0.4 to 0.2, and then that's going to give you that 2-to-1 ratio, and that means you're doing a good job in terms of risk to reward management and finding a play that's really going to be a good trade to find. And looking here, the possibility is that the stock could just lose a lot of its volume. So it's important to keep that in mind when trading these types of stocks, that it's vulnerable to volatility spikes or liquidations. And these liquidations could really cause a liquidity shock, meaning the stock pretty much has a absence of volume, and the stock pretty much just plummets in one or two couple days, or it can happen slowly over time. But given that the company has current buybacks, that's a good signal, but not always a really good leading indicator that a company will go in an upward direction, unless they have some type of knowledge that the average public does not know, and that's why they foresee the stock going up so high so fast, and they need to really repurchase these shares in a short amount of time before an event occurs that causes the shipping index to really surge and have them have a breakout. Now looking at this time frame, this is just the 1 day, 5 minutes, we see how it popped up to the 4.38 level and slowly spiked down to the 4.112 area, about the 4.08 area at one point in the beginning of the day, and then we had a sell-off. But now after hours we had a spike in kurtosis, so meaning on Monday there could be another imbalance in the market, and we can see a surge in the stock, maybe retest. It's at least around the 4.38 level, so I would say 4.35 might be a good target if you're going to start with a 4.2 entry. So that would be around a pretty good possibility to get a 0.15 and just set your stop loss at, if you're setting it at that, you're going to have to set your stop loss at 4.1, and so that way you really play the thing, but you're not risking much, and you're playing the 2-to-1 ratio, and keep that in mind when you're trading these types of stocks. And looking back, we see 180 days ago, the stock had some pops before, and has the possibility of really, really going up. So we just got to keep that in mind, and I'll just show you on one without the indicators, just so you can just see how it's just doing on a more basic level. Going to the 180 days. Let's remove this, and we see here 0.59 stock jumped up one day to $5.986, and now it's been on a slow uptrend back towards the prior high. Let's see if it can retest 5.5. I would say 5.5 would be what we're going to want to look at for a clear, level, but 5, of course, would be a big emotional level if it breaks through the $5 mark, and then it might be off to the races, and the stock might have a real growth period and have a real opportunity to trade on. But as keep in mind, it's always you always got to keep in mind that it's not always a given, especially trading one of these penny stocks. So just keep that in mind, and you can see here, in the time frame without the MTTS, the difference really is astounding, because now we can really clearly see everything we need about buy indicators versus sells. And yeah, so right now there's a current buy indicator on DRYS, so keep that in mind if you want to go long, but just set your entry if you want to be a scalp. Put it at $4 flat, or 4.05 based off of the candlesticks. We got 3 right here for support. And then also, if you want to just enter as a scalp, 4.2 if the breakout comes soon. So anyway, have a great day, and happy St. Patrick's Days to everybody, and take a look at DRYS if you can this weekend, and have a good one. Thank you.